how are you? All right. I'm going to be going over a brief summary of the state of cryptocurrencies in the U.S. and kind of talking about regulations and also kind of where you should be looking in terms of not just how you're positioning your ICOs, but also how you should be looking at the regulatory framework of what the next 12 months are. Obviously, it's a disclaimer, these are my opinions, these are not the opinions of CG Blockchain or the blockchain terminal. So globally, let's kind of talk about what's going on right now. Inside of the market today, we've got 1,400 plus cryptos that are trading at a variety of different velocities in a variety of different markets. And what we've done over the course of the past year, there's a typo in there, is that we've moved into a market that is almost $1 trillion globally. If you look at what McAfee and a bunch of other folks are saying right now, we're expected to move into a $2 trillion market by the end of this year. And currently with Bitcoin's price today, we're pretty much on track to not only exceed that, but to see Bitcoin move towards $1 million price in the early 2020s. And so this is something that everyone should be paying a little bit more attention to. In addition to which, we're moving away from the Wild West of what things were inside of 2017 into an arena where we're dealing with a lot more regulation. And what I like to really allude this to is, think about where we are today in terms of 3 different decades mixed together. We've got the monetary instrument creation of the 1920s. We've got the capability to build hedge funds very much like we did in the early 1970s, and we're tying that together with the technology capability of what we had in 1996. So it's a high velocity environment. And in addition to it being a high velocity environment, we've got a number of players that are coming into the space or looking at the space from very different perspectives. If you look at what happened last year with Jamie Dimon, okay, he made a couple of comments and basically knocked the crypto market, and then they swooped in and bought a position. Now what's happened since then is that there's a class action lawsuit against JP Morgan that was just launched last week. Inside of the arena that we live in terms of crypto compliance and the just general asset capability understanding of the marketplace, we're looking at something where about 3 weeks in our world is literally about a year in any other traditional world, in any other traditional financial market. And it's because the changes are happening in between multiple countries on a very rapid pace. In terms of fiat versus crypto, you know, where are you standing today? Obviously banks towards centralization, established regulatory frameworks, and really, you know, they're entrenched. Crypto, obviously here everyone I think understands the decentralization capability about this. But what crypto is, and what not a lot of people have looked at, is this is digital programmable money, okay? What I want you to start thinking about is, don't just think about crypto in terms of the token that you're putting out or the token you might be investing in. Think about crypto in terms of the dApps that you might be building on top of it, the value of the data inside of it, and the velocity of the utility of that token inside of multiple ecosystems, and how that's going to drive the value and performance of what you've dropped into the market today. From the perspective of financial instruments and the impact of tokenization, you know, we're seeing asset-backed tokens today, we're seeing non-asset-backed tokens today, and we're seeing tokens where you're literally creating value out of thin air. You know, you could raise $50 million inside of an ICO with a total value of about $400 million, which means that you have multiplied your money by a multitude of factors. And now what you have is the capability to even build more value inside of that ecosystem based upon where you want to go tomorrow. We're going to be creating the new commodities, the new derivatives, the new venture capital, the new creative services that are not just going to need to be regulated, but they're going to need to be evaluated from a brand new perspective. Everything that was old is gone. Everything that is now is the new. And the baseline that we start creating today in 2018 is going to lead us well into the 2020s in terms of a brand new perspective of money that will be in between the ICOs on one side, your traditional venture in the center, and ICOs on the opposite side. And these three worlds are going to start playing together in ways that we haven't really thought about before. From a regulatory framework standpoint, that makes things complicated. You have institutions on the one side, and you have the non-institutions on the other. The way that I like to look at the world is like if you imagine a rectangle like this, over here is Wall Street, and over here is what I call Burning Man Wall Street, okay? And what you want to think about that is that you have had a bunch of folks who are not traditional investors who bought Bitcoin at 14 cents, who bought Ethereum at 10 bucks, who are now running $100 million, if not billion-dollar portfolios, and their perspectives on investing, on operations, on what they want to do with this money are diametrically opposed to what you have on Wall Street. Your traditional Wall Streeters are looking for arbitrage, they're looking to build value. The Burning Man folks are looking at, did they fulfill their mandate? What is the opportunity to build social good? What is the opportunity to give corporate giving capital? And what is the opportunity to actually make sure that these tokens, these ICOs, fulfill a longer term mandate? So how do you regulate those types of things? That's what becomes very questionable. And everyone's looking to the United States to really lead. The Trump administration and to the north, the Trudeau administration have been very, very open in terms of saying a couple of things. They want to see this market start to develop and to build its own rules. And to that end, the institutional acceptance is something that we're going to need to start partnering to develop, okay? We've got new digital asset classes that companies need to define, and at the same point in time, industries need to figure out how they want to manage their exposure. If you think about this from the insurance perspective today, how do you insure crypto? Can you insure crypto? Is it requisite for you to insure crypto? What you may want to look at is creation of a new class of bonds based upon cryptocurrencies to leverage the insurance of these new digital assets that you have inside of a new portfolio that you might have just created. You have to look at your investment processes. Right now, how are you even evaluating the tokens that you invest in today? Have you read the white paper? Did you take a look at the yellow paper? Do you understand the tokenomics? Do you even understand the cryptonomics going into this? If you haven't set the baseline to look at those four things, maybe you're just not addressing things in a manner and fashion of how you should be doing your analysis, okay? And trust and reliability in the throughput of crypto needs to be something that becomes tantamount and part of everyone's language on a daily basis. Trust, the implicit trust of crypto, is something that we need to build across communities. Now that's going to come through things like Miko Matsumura's ICO Governance Foundation. That's going to come through some of the other folks that I've run into here that are working on compliance-based organizations. But it's also going to come through us working with each other in an organic fashion to realize that more wealth, more value can be generated by collaborating than by working in silos the way that traditional finance is operated. And then confidence and the challenges of integrating with the blockchain. Think about this way, okay? You've got certain products that were forked from the Bitcoin blockchain like Digibyte that are trading at, about 5 cents, but they have the best technological proof case that are out there. You have weird financial tokens like Pepe Cash that are the best technological proof of utility, but these are things that delve into weird miasmas of the underbelly of the internet that you might not want to touch. But at the same point in time, think about that one. Pepe Cash went from 1/10,000th of a cent to 10 cents. So someone who had $1,000 in that is now a millionaire, okay? Look at Dogecoin. Dogecoin went to a $2 billion valuation. Dogecoin was something that was originally created as a lark and was used to fund the bobsled team of Jamaica to go to the Olympics. But now it's made itself into an institutional capital vehicle that we really have to take seriously. Sorry, just wanted to flip this. And so that gets me into what are the regulatory bodies talking about. So I've traveled around the world and I've talked to a bunch of folks. I've been meeting with regulators here. In the United States, we've got differing perspectives. And I think across the globe, you've got differing perspectives. Is it a security? Is it a currency? Is it a commodity? Is it none of the above? Is it an actual utility? What is it classified as based upon where you're domiciled and where your domiciled company interacts with the other entities where you get investment from or you are planning on trading your tokens? What are the tax ramifications on those tokens based upon how you have yourself organized and set up? If you're a Cayman entity, if you're a Singaporean entity, if you're in the Isle of Man, if you're in Gibraltar, if you're in Malta, you have major capabilities to do tax abatement where your tax is potentially zero. But if you consider this from the perspective of these two gentlemen here, okay, is it a commodity? Is it a security? If you are funging your tokens, you might be responsible for 40% tax the same way you are on a stock. These are things that we don't just need to start thinking about. These are things that we need to start planning and building mitigation strategies for today that allow us to build the wealth generation and industry generation capabilities of tomorrow. Now, this is what's real interesting to me. If you think back to, how many just show of hands remember the pre-Euro Europe? Okay, you know, walking around with a whole bunch of different currencies in your wallet, going country to country, that sort of thing. Like, I'm gonna be in Amsterdam for lunch, might go to Munich for dinner, for a meeting, have to have multiple currencies there. Think back to probably around the 1880s, okay? Maybe a little earlier than that. In America, what we had was a system, before we had our Fed, which was standardized under Chase, we had a series of banks on a state-by-state basis that had different instruments, okay? So you could have a Chicago dollar and go to New York and they'd be like, hello, Mr. Chicago or Miss Chicago. Thank you for your Chicago dollar, but that's only worth 50 cents here. You have a New York dollar and you could go to Illinois and that would be worth 2 Illinois dollars. That's the state of crypto today in terms of considering where things are going. And it's not just this on an international basis. It's going to be this way in the United States, okay? Take just regulatory decisions and legal precedents that are coming down the pipe. Arizona has started a process by which they are going to try and become a crypto-free state. Wyoming passed 5 laws. There's an organization called DATA. If you haven't heard of them, grab me after this, I'll put you in touch with them. They're involved with most of the lobbying and bill writing in the United States right now in terms of how we can keep things in terms of a crypto-free country, all right? But then you also have Nevada, and Delaware is not on here because this is how fast stuff is moving. Nevada is looking to pass laws as well that are going to make it as friendly to businesses in crypto as it is to businesses now with a very low state tax rate. And Delaware is going to hop into the business too. Do you know why? Because Delaware, for the longest period of time, is where everyone from all around the world and across the United States came to create their corporations, their LPs, their LLCs in the United States. And as these things change, these are going to have dynamic effects in terms of what regulation is in the United States. Running a little long here, so I'm just going to rip through this. Exposure in terms of industry updates and adoption. The Chicago Boards of Options Exchange, the CME Group, which is the Mercantile Exchange, TD Ameritrade, are already into Bitcoin futures. Okay, right now you can do a 4-month future. Liquidity, the SEC is considering new rules as of April to allow Bitcoin ETFs. And as far as I know right now, Bitcoin ETFs are starting to matriculate into the market. Regulations and trusts. We're going to see the first SEC sanctioned hedge funds inside of the next 6 months. What this means is that you don't have to be running Cayman entities, or maybe you do have to be running Cayman entities, or maybe you're running St. Vincent entities, or maybe you're running Singaporean entities, but you're actually going to be able to work with the American government to trade. And Coinbase Custody is working on broad-based ERC-20 adoption, but Coinbase just bought Earn.com yesterday, all right? This is going to have impacts across the industry. And then lastly, Coinbase Ventures is moving into the space. China at the same token is creating a competing environment by putting $160 million into the environment to talk about just investment. And what this is going to create is competing regulatory frameworks. So in 17, crypto gained momentum as a utility. In 18, security tokens are emerging. But now what we have to think about is the complex interoperability of regulations across these different organizations and how this is going to impact us, not just from a fundraising perspective, but from a perspective of how we build into the future. New institutional players are out there. I know I'm out of time. Goldman Sachs has embraced crypto, and we've built a blockchain terminal solution. You can come check out our booth. We've actually integrated about 80 exchanges, and are building the capability for you to trade and build, your own liquidity. On the opposite side, to build into the Burning Man environment if you want to build that. The future is really not just yours to take by the helm, but it's something that you need to be working in tandem with your peers on. If you have any questions, I am Oz Sultan everywhere on the internet, and I thank you.
Oz Sultan, ladies and gentlemen. Very illuminating, thank you very much. Let's bring up Dave Carlson. Come on up here.